The 2025 Africa Financial Summit is currently underway, with the event looking to shape a more inclusive and resilient financial future for Africa. Our anchor Ntaoleng Lechela is there and caught up with Cheryl, CEO of Absa International, to explore the evolving role of African banks in driving intra-continental trade and financial independence amid shifting global dynamics. So let's take a look.
We really do need to see the growth of more intra-Africa trade. I think it's currently sitting at quite a bit below 15%. So we do need to see the stimulation of intra-Africa trade. Now this happens at a time where we're seeing geopolitical tensions, we're seeing the perceived risk on Africa certainly increase or certainly exist. And so you also see a lot of the global correspondent banks de-risk out of Africa and retract somewhat. So then the question is, okay, well then how do you stimulate global trade and importantly intra-Africa trade? And what's really important there is the role, I think, that as global correspondent banks do de-risk somewhat, that African banks step into the role. And what's important about African banks stepping into the role, I think, is both local African banks as well as regional banks. So obviously banks like ourselves, Absa, being a Pan-African bank on the continent, I think we play a vital role in providing that connectivity between global trade flow and thus global correspondent banks, and being able to execute various trade vehicles on the ground in the countries in which we operate as a systemic bank, but also helping somewhat, given our understanding of the continent and given the strong relationships that we have built over the years with truly local African banks, we can provide that interconnectivity between global and local African banks. So in summary, over and above ourselves facilitating trade and investment flows, we can also extend that and play a vital role in connecting global and local corresponding banks by taking some of the risk ourselves of local African banks.
And just on that, you mentioned some of the risks that are in play. One in particular around currencies, right?
Yes.
Especially when we are also seeing the other movement of the de-dollarization. How are you working through that challenge in terms of intra-Africa trade, where we're seeing dollars being used and not necessarily currencies within Africa?
You're right, and that's certainly some of the risk that does exist. You know, across Africa, we're seeing geopolitical risk, we're seeing political risk that always exists. We're seeing currency risk, currency illiquidity risk, and convertibility risk. And so, how does one address that dollar crisis? I think a lot of it is working with global banks, working with DFIs, and then working with local banks as well. We're seeing various mechanisms that are being brought to the fore, such as the Continental Free Trade Agreement, which is looking at manners such that there's an ease of trade. But then under that, what are the linked mechanisms that can also support the Continental Free Trade Agreement? Naturally, digitization, naturally the likes of facilitating the ease of payment, so PAPs that we're seeing. And PAPs is really important because that's also looking at how we can offer seamless trade transactions and seamless interaction of payments that are more local currency based as opposed to dollar based.
And I'd like to bring in perhaps what we're seeing in a sense when it comes to small businesses. I had a conversation with the DFI, I had a conversation with the IFC, the director for Southern Africa, Claudia Constancio, and she mentioned that capital is there. It's just that these businesses are struggling to access the capital. And she mentioned that the banks have the money. So how do we close that gap, right? Finding the right businesses to fund.
We have a very close relationship with a number of the DFIs ourselves. We've built strong relationships with IFC, with BII, with MEGA, and we've been funded by them ourselves to facilitate trade. And in fact, the funding that we've received from these entities allow us or give us the means to facilitate trade to the extent of over, I think, about $1.6 billion. So working with DFIs is key. Shifting on though to your key question as well around SMEs, obviously the growth of SMEs, I firmly believe, is intrinsic to the growth and the development and the sustainability of the continent. More than 50% of self-employed businesses self-employed businesses are SMEs, and interestingly, and you probably like the anecdote or know the anecdote anyway, is that half of that is women as well.
Yeah.
So it really is imperative that we work with DFIs and work as Pan-African banks and work with local banks to understand how we can fund and support SMEs. And so you say, obviously, naturally, there's a risk with SMEs and funding them. So they are there to be funded, and the finance is certainly there to be provided. But then how do you get that marriage such that then, the risk metrics are met? Many of the SMEs are not financially included, which is a problem just around payment mechanisms and having the ability to get trade facilities, to get working capital facilities, just to operate normal bank accounts. So we really need to ensure that SMEs are financially included. And Absa is doing a lot in that space to work with supporting the development and inclusion of SMEs, and particularly women-led SMEs as well. When you look at the support of credit, the risk there is past financial inclusion. The risk is understanding of the credit metrics. So what is the risk that those that are going to fund SMEs, what risk are they running? And I think you can't look at it in normal traditional credit risk models. We more and more need to use digital and understand how digital and digital inclusion can be the bedrock of us trying to understand how we support SMEs.
That was Cheryl, CEO of Absa International.